Hey everyone, this is your Precision Markets coach, Brian, hosting our Thursday office hours call. We host this call every Tuesday and Thursday at 12 o'clock Pacific Standard Time. That's GMT -7 time zone wise. And we host this call to be able to answer your questions that you may have in a more visual format. So if this is your first time joining the phone call, feel free to ask your questions within the chat. And when you do, we will answer them in the order that it's received. And so with that, we'll go ahead and begin. Yep. I did take a phone call. I did take a trade today. I took 2 trades on gold. It ended up nabbing 15R. Almost, I should have held just a little bit longer. I would have nabbed about 25R on the trades I took. But nonetheless, they got to pretty much like 80%, 90% of where I expected them to go based upon what I was seeing market-wise. Yeah, I'll go ahead and show it to you. Give me 1 second. I'm gonna share my screen with y'all. Let me know if y'all can see my screen. Can y'all see my screen? Okay, perfect. So okay, we'll try this. Okay, so market structure wise, first and foremost, always the most important thing. Oh, get this wrong. Okay, here we go. So price was here in this daily demand zone, but one thing, this was the first high it had to break. Price failed to go up and break that high. And then it rejected that high, rejected the attempt to get the high with 2 bearish candles. So my expectation was price needed to go lower than this low right here, which you'll notice that it did today, right? So since we started the day, we were up here. My directional bias was that price needed to go down and take out that leg. So that was what I had from a higher time frame direction. So I was looking for sales for the day, with the target being this low point. So we'll go down to 15 minutes, and price had made strong move upward yesterday, came back down, etc. So we had a POI develop right here. I saw price. This was before I woke up, and then here was the time that I woke up. Price then ended up making a new POI, and then right here. So price kind of basically left that POI, came back and tapped in, and then right here this was the Frankfurt Open. So Frankfurt started here, and I literally was watching the charts right at the beginning of the Frankfurt. It ended up happening. We ended up getting a what's it called? Ended up getting an entry. So going down to 15S. And take the first one I could have, which was right here. I ended up taking the second opportunity I had because I missed the first. Give me 1 second, I'm syncing my views. Okay. So the trade I ended up taking ended up going from this high to this low, and then I got on this breakout right here. So the stop was somewhere around here. So my stop was here. Then going back, looking at earlier time frames, a couple of spots where I thought my trade might see some resistance. And so I was kind of watching to see what kind of reaction we got. So the first one was here, which it kind of mulled through. The second one was right here, which definitely did give it some pushback. Third one was right here. And then the fourth one was down here. So these are all previous areas where there was a strong demand. And if anything, I was not expecting price to reverse direction, but price to pull back when hit. And it kind of did in multiple places. And then the last one is this red area that I have down here at the bottom. That's the last place I expected. Overall, though, go right down. Let me go to the 1 minute. Price ended up going towards my target. And when it got into here, I closed this trade for 11R, somewhere like about this. So it got to this first area that I said right here in purple, it pushed back, it broke through. Got to this level, pushed back, broke through. And after breaking through, I always expect to pull back too. And got to this level and pushed back. And then you'll notice it moved more sideways over here. So at this point, I didn't really believe that it was going to hang out. So I closed it. Then thinking that this level was going to get broken, I waited for it to pull back, which it did. So then I ended up having a pullback scenario. Oh, no, sorry, I looked at the wrong one. Ended up having a pullback scenario here. And I ended up taking yet another trade off of this, but it was all based upon seconds, covering my high with this. And then this trade dropped 4R. When I saw it reject here, essentially make a couple rejections in the same area, that's when I ended up closing for both trades, basically. And so I ended up taking 11R on the first, 4R on the second. But ultimately, this bottom red line was where I expected price to go and finally start reversing, which it did. I could have tacked on another 8R here or another 4R here on that trade. And if I'd held this one, I could have hit about 14. So I could have got me another 3R. And that could have combined the two for somewhere close to almost 25R. So that was the only two trades I took for the day. What you'll notice too is that once price hit that spot, it did a little shake and reverse. And then this is where Marco today caught his trade and he caught a buy from this. So yeah, this is the only trades I took today. The market moved really from the London. I didn't think there was nothing going to stop the dollar pretty much today. And that turned out to be the case. So the dollar was super strong today based upon the news that happened. So. But yeah, that was pretty much it for today. Can y'all hear me? When it comes to POIs, I mean, I just have two simple rules. it has to break within balance, and it has to break a high or a low. I don't pull, I pull ranges, so I don't pull, for instance, single candles like most people do in the community. So if you go into a line chart, you'll see this was a low, this was a high. It breaks that low. It comes up, this is the highest point. After it breaks this low point here, that's where you have basically a POI. And then it continues on the same thing. This is the low point. This is the highest point after making that low. Once it breaks and it breaks within balance, that's how I pick my POI. You don't see chalks because I don't use the 1 minute. I use the seconds time frame. I do not recommend you even trying to trade seconds though, until you have a solid plan on how you address the market. Because if not, you're just going to lose your money faster on the seconds. So the market had a chalk up here. So let me turn this on. This makes it a little bit easier for you to see. All right. So the market went from this high point to coming to this low point. And right here, that's when you had the chalk. So this would be more for BOS. And then price ended up making breaks of structure, comes back up, then it makes yet another chalk. So I have another chalk here. Janice, I'm not sure what you're talking about regards to internal or external. I think you were referring to Nathan. He was talking about liquidity for internal and external, but I don't trade liquidity, so I wouldn't be the best to explain it to you. That'll be something that either one of the other coaches will have to explain. That's just not something that's in my repertoire. We have a chalk here, and we have yet another chalk up here. So it chalks multiple times. That's why I say chalks are not really, a chalk by itself is not all that great of a signal. It makes another chalk down here. Then here we have breaks of structure. So it breaks structure here. And then it broke structure again right here. So we were far away from the chalk at this point, and then it broke structure again right here. So you have chalk, another BOS, and then you have yet another chalk up here. And this is why I say stay off of the seconds time frame until you're really confident. If you can't do 1 minute entries and you're not seeing the consistent entries, then you don't need to do you don't need to go on the seconds, because the seconds, it's just going to show you more confusing price action and it's not going to really help you. So here was another break of structure, and then it chalks down here, break of structure, chalks up here, then it chalks down here, and then break of structure, break of structure, break of structure. So I always have the same, it's always the same thing with me every time. Sometimes I enter on chalk, sometimes I enter on the break of structure, but it depends on the type of break that I get. And if I get the break I'm looking for, then that's when I start to look and pay attention. So here it chalked, here it broke structure, but then it also went and it chalked again. And so I took more of a risky entry because it didn't exactly chalk before, but it comes into my spot, it broke in, and then boom, price ended up going down. Or I could have got an extra 8R, but I closed out at 4. So that's pretty much how I kind of pick my POIs based upon where I see strong momentum, and I pick my entries based upon where I see strong momentum breaks and changes of character. If it's not strong, then I just don't enter. I don't care about just seeing the chalk by itself, because chalk by itself is a very poor signal for you to use. Like it shows intention, but it doesn't show it all. when I show my charts, I show it on 1 minute. So that's why it may look like you don't see chalks or breaks of structure on my charts, but that's just because I go down to 15 seconds and lower. So I don't use I can't tell you last time I've taken an M1 trade. I really just don't. So I just find the success I'm looking for sooner on the seconds, but it's just with lots of practice. Kind of like a line chart just helps you visually see it. So if you map, I mean, pretty much you can map points easily without it, but here's the lowest point. Here's the highest point. Here's the lowest point before it breaks the highest point. So here's the lowest point. I mean, highest point. Then it comes down to here's the lowest point. Here's the highest point before it breaks the lowest point, and then so on and so forth. Here's the lowest point. It comes up high, and then it kind of breaks down low. But you just got really line chart can visually see it, but you can probably see it better with the candles. You just have to kind of remember, where does it break? Where did it, what caused the lowest point? All right, once it breaks here, what's the lowest point? All right, it goes up here. And then once this breaks, where was the highest point? It continues on downward. It goes down to this low, pulls back, makes a high, breaks, and just continues to keeps on going. If you can't see it, a line graph is a good way to kind of help kind of train your eyes a little bit. But you have to really pay attention to the wicks, and then where's the highest point and the lowest point. So like, for instance, here, this wick is lower than this wick. So that's how I know this is the lowest point. It goes up to this highest point. And then once it crosses this line, that's how I know, all right, we've had a break of structure or a chalk. I hope that makes sense. Let me know if that makes sense. Yeah. It's just market structure. It's the same thing as market structure, guys. It's just, I don't focus on calling it higher high, higher low, or lower high, lower low. I just say this was a high point, this was the lowest point, it broke structure, here's the next highest point. It breaks structure to the bottom, this is the next lowest point, next highest point, and so on. Like, everything I do is based around market structure. But it's not as important. It's not as important to map higher high, higher low to me on the entry time frame. Like, when if you use 1 minute or seconds, like, it's just not important. The reason why I say it's because I know that this is a higher high, higher low, higher high, higher low, higher high. All I just mark it is high, low point. This was a change of character. This is a lower low, lower high, lower low, lower high, and so on. But it's the same thing as market structure. So yeah, no, I use imbalance. So like I was saying when I mentioned, I talked about my POI selection. POIs have to have breaks with imbalance. If they don't, I just don't use them, because if not, it's a very weak break to me. And I found that through my testing, like, the POIs that don't have imbalance, they usually don't they don't hold. But the POIs that have imbalance, they have a better chance of holding. So that just shows that one side was able to win out over the other. So James, you asked about BOS being a better confirmation. That's kind of how Nathan uses it. So Nathan doesn't enter off of chalks. He'll enter off of a chalk and then a BOS, or sometimes a second BOS. So the two of those, BOSs can be a better confirmation. Like, if you see a chalk then a BOS, that just gives you more confidence into taking the trade. But for me, to me, like, it's not about the BOS or the chalk. It's about how it BOSs or chalks. And so I look for where there is I look for where there's a strong momentum break. And if that ends up being being in the chalk, then I'll take the chalk. If it ends up being in the BOS, I'll take the BOS. But it's all about how it breaks. But it just really comes down to what you test and you're testing to figure out, okay, I have a high degree of success. Like I don't put my faith in any BOS. I don't put my faith in any chalk. I put my faith in the ones that show high momentum or high probability, because they're not all chalks and BOSs are made the same. But that's just kind of the way that I approach it, and I found that's given me high probability consistency on my setup. So when I know that I see a high momentum chalk or high momentum BOS, that's where I really want to enter. So what other questions do y'all have? I don't really think about that, to be honest, because it's to me, I just take trades where I find where I saw momentum that moves. I don't really care if it's inside the imbalance or not. Sometimes it's not. Sometimes it is. It's not. I don't even make it a consideration. So if you go back and look at 15-minute, price ended up going from this high point to this low point to this high point, and then it broke right here. Look at the candle that it broke. It broke with imbalance. Okay, cool. Then it comes back, it taps into that POI right here. I start looking for trades. My trade ended up being inside this imbalance. It comes all the way down to here. It pulls back. This didn't break within. Oh, this did break within balance. No, it did, but at the same time, it never pulled back. So I never would have considered this as a trade. I never considered anything there. It comes down here. It breaks again. And if you look, this broke within balance. It didn't exactly come up to my zone. I had pulled a zone here like this, and it just happened to miss it. So, but I still ended up taking the trade anyways, based upon different confirmation. And that's how I ended up taking this other little 4-hour trade that took right there. So, but yeah, no, I always pull imbalances, but I don't. Some people believe in trading like the fair value gap and all that. I don't do that. I just focus on saying, all right, if it went from this low to this high, I'm not going, for instance, make my supply zone like this. If I made like this, I would have missed the trade. I make it from the lowest point to the highest point, because all of this, from this low to this high, if it broke past this low, that's all supply. Like this whole range of candles is supply. Supply is not just this one candle. This is a trick that y'all were taught, that it's widely taught on the internet, that this is how you should pull supply. It comes down to the refinement of one wick, one candle. I guarantee if you do it like this, you're going to miss a lot of trades and be frustrated. But it's not a bad system to start with, because it's just the way of your eyes seeing it. But for me, that's not a telltale sign of supply and demand. Supply had to be able to push past this whole push up and break down below it with imbalance. So yeah, no, I always pull imbalances. If you go back to even looking at the trade recaps that Rob posts on his Instagram account, I always point out imbalance. So no, imbalance is a very important thing that I use in my trading specifically. Yeah, no problem. It's a very important piece for me. So very, very, very important piece. I think you want to know where like the market had the most push and imbalances really helps you be able to tell that, oh, the buyer is one here, the seller is one here. So you definitely want to know those things. What other questions do y'all have, guys? Oh yeah, you definitely miss a lot of trades pulling one candle. I'm not gonna say it's I'm not gonna say it's the wrong thing to do because there are times where it does come in handy, but you're gonna miss a lot of trades because you're being so precise as to saying that price has to come into this one spot. And price can do whatever it wants to do. But the technical definition of supply and demand is here was a push up. Price broke through. All this area had to be supply. And so I end up seeing a lot more trades in a day than most people because I don't have these small areas. I don't have these small areas that price has to come into. I have very wide areas, but you also have to become better with your confirmations too when you do it. But if you want, there's a constant battle between being right and being profitable. Being right does not mean that you're always profitable. And what I mean by that is if I was right, I would say price comes into this very, very small zone once it broke over here, which it never would have. Then after that, I would have missed this entire trade, period. I wouldn't have even had this trade if I technically shouldn't have, which means I only would have ended with 4 hours in the day. But I was right. Like price came into a supply. And if price was going to come to supply, it's going to go down. Well, if I was right, it went down, but that means I'm not profitable. Whereas I say, okay, I know this whole general area is supply. It comes and taps into it. I mean, look at the reaction that we got. Price ends up tapping into it and then instantly going the other direction that it went through for the rest of the entire day. That's profitable trading. So I don't focus on being so sniper precise with the things that I do, because then that focuses on me just being right instead of being profitable. If that makes sense. So try to balance that, balance it out because I see a lot of people post on social media and they show these super super tight zones. And I'm like, yeah, you got that zone, but you didn't. You missed probably a bunch of trades or took a bunch of losses because of not trying to focus on being right. So no, I I hate the whole little pro trend, counter trend thing because there's only one trend, and that's to me for me in my trading. There's only the higher time frame trend. So technically, I'm against the trend right now. I'm counter trend, but I still take trades. So I don't. It doesn't really matter to me if it's pro or counter trend. I just need to know what phase I'm on. So you have a phase where you're riding with the trend, which most people call pro trend. I call it impulsive boost. And then you have one wave where you're not, you're going against the trend. A lot of people call that counter trend. I don't call it counter trend. I call it corrective moves. And all of my moves, they come from the higher time frame. So whatever is based on the higher time frame depends on the trade. And I trade both ways, so it really doesn't matter. So I just have to have a reason for such to do either or. So I hope that makes sense. Let me know in the chat that makes sense. Doing the pair with daily and 1 hour is no different than what you do with 4 hour and 15 minutes. I use one time frame to figure out what's the direction it's going to go. So let's say, for instance, it's going up. This is what I do on the daily, right? And I say, okay, on the daily, here we are. We're in some supply or demand. I use the 1 hour specifically. I only use it just to be able to tell when we have chalks at daily supplies and demands. Same thing you do with 15-minute. So I want my trades to look something like this. And then I use 15-minute for POIs, but I could use the H1 for POIs. So it's literally the same system that you use for H4 and M15, but the only difference is that I just use different time frames. So same system. So everything in orange is the daily or your 4 hour. Everything in blue would be your 15 minutes, but my H1. So all you do is you just slide the time frames. Like it's nothing systematically different than when you use the time frames, but I end up using M15 for POIs just because they come to M15 POIs a lot sooner than it does H1, and allows me to get in for tighter spots. That's all. But it's not really anything different. Well, I definitely like when you get to a daily supply demand zone, I have to see a H1 chalk. I don't use M15 chalks because that's just too small of a time frame. Like there's just time frame pairings you should go with. Like if you use your higher time frame as the weekly, then your 4 hours should be your POI and change of direction time frame. If you use the daily as your higher time frame, you should use H1 as your POIs and your change of direction. If you use 4 hour for your higher time frame, you should use 15 minutes for your change of direction and POIs. So it's the same system, just different time frames. I don't focus on the 4 hours. So pretty much think about it like this, right? You have M15/H1. Like all this is, guys, is multi-time frame market structure. That's the only thing that you have to know. How do you do multi-time frame market structure? Oh, get this wrong. So everything in blue is M15. Everything in orange is daily or H4. So market structure points wise, this would be like higher high, higher low, higher high, higher high, higher low. So that's everything market structure wise. So regardless of the time frame, it's the exact same thing. And so then you have the blue lines, which represent either H1 or M15. It's the exact same concept. It does not matter the time frame. Like, please do not get caught up in time frames. I see people like, well, I just like want to trade this one time frame. It's like, great, that's the time frame is really irrelevant. Time frame is just a reference of how much you measure one candle. It does not do anything specific for the system. It does tell you if you're a day trader, swing trader, etc., because it's just going to take, if you wait for a POI on the 4 hour, that's going to take a lot longer to hit than a POI on the 15-minute. So that's all it kind of really does. But regardless of what time frame you choose, it's the exact same system. It's just market structure. So the move that ends up making on either I'll run this backwards. It's 1 and 15. So the orange lines are daily. The blue lines would be H1, or the orange lines would be the exact same thing on H4, and the blue lines be same thing on M15. It's just knowing the time frame pairing that you use. So daily or H4 goes down. You wait for a chalk that you see on H1 or M15. Once you see the chalk, you start buying from every single one. right? So I buy here, I'm buying here, I'm buying here, something like this. So each one of these would be demand zones that price tapped into on, H1, 15-minute, et cetera. And that's why I keep taking my trades on. You pretty much, if you follow time market structure is going to tell you when to stop buying or when to stop selling. So you really have to just know market structure. So if it makes a higher high here, I know, for instance, as soon as I see a chalk like this, now I'm selling. And the reason why is because I know price is going to go into some demand zone like right here. So from an M15H1 perspective, I just start selling. Because I know what to expect is that on the daily or H4 time frame, a higher time frame, price is going to move like this. So it's really market structure, guys, that you just got to focus on. Don't get caught up in the time frames, et cetera. Like that's the time frames are just inputs of a system. It does not matter what time frames you choose, but when you choose a time frames, you got to know the pairings of what time frames to choose as part of the system. Time frames itself are very irrelevant. So if you go back and watch this, there's a video that Rob has in the course that's about multi-time frame market structure. And that's all this really is. The time frames are just knowing what time frames pair together. Daily is the higher time frame pairing for H1. H4 is the higher time frame pairing for M15. All these time frames are for finding POIs and then seeing these changes like this change of character and then knowing, okay, the direction might have changed here. So if you go back and watch the video on multi-time frame market structure that Rob has, that's going to really help. So one last question, guys. Any other questions that y'all may have?
Yeah. Hey, Brian. So when you wake up in the morning, I know you have multiple pairs you look at. So, what is and I know you don't mind trading all of them. So, what is your strategy on looking at your pairs and trading them at any given time and which one to trade? What is your strategy on that?
Just looking at market structure.
On the daily to say.
Yeah, I mean, I start my morning every morning the same way. So I come here, I have a view where I can see all the pairs that I'm looking at. And it's always the same. So it's the same 6. I don't look outside the 6. Because those are just the ones that I focus on. It's too hard for me to know more. So here's my 6 that I currently look at the moment. I pick no more than 2 pairs that are correlated. So if you go back to my actual trading list, it says pair 1, pair 2, pair 3, pair 4. The reason why is because NASDAQ and US 30 are correlated. They're going to move pretty much the same direction. EU and AU are correlated. They're going to move the same direction. So I trade really 4 pairs. So I come here, I look at market structure. So market structure says, all right, here's the supply zone. What's my expectation for the day? Oh, my expectation is that we're going down. Okay, cool. I'll look at the second pair. I say, all right, what's my expectation? Expectations that we're going to go down. Okay, cool. UJ, not even touching right now. It's a clusterfuck. So I'm not going to do that. Here, I have gold. Well, here we were in a daily supply. Okay. I mean, a demand. Okay, but it needed to take out something first. It's like, okay, so never mind. Then you have the indices in which on both of them, I was having an expectation that price is going to go down. So the expectation is you're going here and you're going here, which both of them did. So now I know I'm only looking for sales on Euro. I'm only looking for sales on USD. I don't care what this thing does. Gold, I happen to be looking for sales. NASDAQ, I'm looking for sales. US 30, I'm looking for sales. This is the first thing I look at in the morning. This takes me no more than 3 minutes to do, largely because it doesn't change that much. To change the direction on the daily time frame takes a lot more money than all of us have collectively. Then I'm able to just go down to whatever time frame I use for POIs, and literally, you see these orange lines right here, bro, on my chart?
Yeah.
Those are alerts. So I just have alerts set, and sometimes they're old alerts, but this was all a POI. So I was looking here. Over here, here's a POI here that I'm watching, and then over here, there was a POI right here. It broke. I think it broke through this. Yep. So now I don't have a POI for this one. I'm waiting for it to take out that low. So now I would go set an alert that says, okay, when it breaks this, then start looking at this one. This one, I think, yeah, this was a POI.
Wait, so Nas, why don't you have a PO? Oh, that's 15 minute. Oh, yeah. Why don't you have a PI for Nas?
It's already kind of broken through. It's broken through the main one that I would have touched here. It hasn't come to this one. So I'm expecting it to go down lower anyways. So I'm expecting this to be a POI when I wake up tomorrow. So
Okay.
and then literally all I do is just I move my alert lines. So as I go through the day, people as I go through the day, I just wait for when it comes to one of these alerts. This is the most boring part of what I have to do all day. And then I just update these alerts all day. So I go in, draw a new POI, set up new alert. It breaks the POI, set up new alert. Breaks in the POI, set up a new alert. That's literally all I do.
So you never get like thirsty. It's like, okay, you draw your POI. Okay, obviously your POI is maybe 20, 30 pips, maybe 15 pips sometimes. So where is your alert compared to your POI? Where is the alert inside the POI?
When it touches. When it touches
as soon as
the
it
POI.
touch.
Mm-hmm.
As soon as it touch, you get alerted.
Mm-hmm. Yeah. So it's a lot of waiting. That's the sucky part. But that's just the name of the game. So I just and this is how I can see. Like I can see all 6 pairs because I keep this view up. I don't change in this view until it's in a POI. So I'm not looking for trades or anything.
Okay.
Does that make sense?
Yeah. So 6 pairs on your screen. You just draw POIs for every one of them, and you draw your alert at the edge of your POI.
Mm-hmm.
As soon as it hit, bam.
Yeah. So, like for instance, I would draw it something like this on this one, and I would just wait and say, "Oh, when does price go into it?" So, I'll give you an example. I'm gonna erase these candles, right? So, price goes into the POI like this. I've got my alert on. I get a notification. Then this would be the only one that I then go and say, oh, let me go look at my entry time frame and see what I get. Meanwhile, the other ones are still waiting for POIs, but I can see everything at once, right? So this one's moving. I'm waiting to see if I get a chalk. Oh, great, I get a chalk. Say, for instance, this was an entry. I'm taking my trades off of this or whatever. Boom. We'll say we'll take a trade here. Stop here, something like this. Set whatever take profit I'm going to go for. And meanwhile, I'm just waiting to see if the other trades go into a POI. So that's pretty much it. But don't recommend starting off like this. Definitely recommend doing one, no more than 2 pairs at first. Because the thing is, you just have to get down your plan of what exactly do you do. Once you have that done, then you can watch multiple pairs because all I'm looking at is market structure. So
That's pretty dope. Thank you.
no problem.
So wait, on that 1 minute time frame, obviously your indicator, that indicator is you seen it chop when it made that red line at the bottom.
Mm-hmm. Mm-hmm.
And that's when you.
Yeah, that helps me to see chalks and breaks of structure. Like I only use 2 indicators. Well, 3 if you include volume. Well, 4, because I have one that shows imbalance. I just don't always show it up on my chart. But I don't really. I just glance at volume to see if there's a lot of volume.
So basically, if you're on that 1 minute time frame, you just really wait until you see that market structure just red and green, right?
Yeah, that's all I wait for. But this ain't like what I show you on my charts is actually the view that I look at. I have all these different templates. So like this is like how I normally look at my chart. Allows me to see imbalance. Those red and green lines will show up again. And allows me to see changes of market structure. And that's pretty much all I pay attention to. I'm just looking and say, oh, it chalked here. I get a red line. I know it broke. Then I wait for it to come back. I draw my fib because I don't really focus, like I was saying before you got on the phone call. I don't pull just single candle supplies and demands. I pull ranges. If I pulled a single candle, it would say come to this zone, you'd miss this trade. Whereas I just pull pretty much what I don't even pull it on entry time frames. I just look and say, all right, as long as it hits somewhere above this yellow area, I'm good.
So you drew, okay, obviously that's a fib, and you drew from the top one. And where did you end it at? Where did it end?
At the lowest point before it moves. So right here.
The lowest point is not where that red one is to the bottom. Wait.
Yeah, that's it. I drew out the line over here.
No, but why isn't at the bottom one right there where the red line is? Right there. Yeah. Why is that not the lowest point?
Oh, that's a whole different structure break. So market went from this high to this low to this high to this low point to this high, and then it broke again and made this low. So I was taking the trade off of it before it came over here. That's where it broke structure right here. It's just kind of hard to see with this.
Is that a lot? Yeah, because I don't see a red line right there. Is that?
Oh, that's because we're farther down.
No, because I see a red line at the bottom. What about the one that's where you're talking about?
It only shows the last 3 red lines, the last 3 breaks.
Okay, so did you draw that personally right here?
What? No. See, so here we have 1 break, 2 breaks, 3 breaks. When this one breaks, the line will update. See. So now 1 break, 2 break, 3 breaks. When this one breaks, that line goes away. I only have it set up to show me the last 3 breaks.
Oh, that black line is the ending of it. Okay. I'm like, where'd that line come from?
Yeah. So it's just all it is market structure. So I draw my fib from the highest point to lowest point. If it touches in within this yellow point, cool. I'll take the trade.
So you take the trade. Well, obviously you took the trade right here, but when you take the trade, I mean, so you took the trade at the wrong place, kind of, right? Because shouldn't it be higher where you entered the trade?
Nope, it was the right thing. In the moment, this is all that you were seeing. So as long as it comes into this yellow area, I know to take the trade. It wicked into this yellow area. That's why I draw out this so I can see it. It wicked into this yellow area, so I'll take the trade. Now, stop loss wise, that's how whatever stop loss rules. Price comes back, it comes into it. Would I've taken this as a trade? No, because it broke structure. This is a chalk upward. It just happened to go. You have to be wary of patterns like this, where price goes, makes a new low, makes a new high, makes a new low, because then what you have is consolidation. But sometimes it works out to do like this.
Yeah, sometimes it'd be like it have like they call it what, inside bar pattern, like that immediate reversal.
Well, this one doesn't inside bar. I'm talking about structure wise. Sometimes structure wise it will do this, but it's not as likely. So
okay. And what is your break even protocol? to go break even? Because I think I went on EU. I took a trade today,
Mhm.
and I did a 5 pip stop loss, and my mechanics was just like go break even at 2%, which was 10 pips. But then it came back and wicked me out, and it went down. So like, what is your break even protocol?
It's evolving. I mean, before I was just using 2R. Once I hit 2R, I'll move to break even, or I would do it after, since I use seconds, I do it after 2 BOSs. On M1, it would be 1 BOS. But I start taking a look now at areas where I expect price to pull back into. And because of that, like sometimes I break even too early. I would break even too early. It would go into this area where I expect a pushback, and then it would take me out of a trade that would go on. So now I kind of I watch the reaction I get at these certain points that I'm watching for, and sometimes I hold my trades open longer even past 2R. But it's more or less, it depends on how close we are to one of those areas. And that will then have me decide if I go break even after 2R. But after 2R, I'm usually looking to break even.
After 2, yeah. I broke even at 2R and it came back and it whipped me out.
Hey, you gotta be careful because like with my trade today, there was multiple times where I had the impulse, oh, I should I really wipe everything. That sucks. Okay. I had multiple impulses where it's like, oh, maybe I should close the trade here. But I just kept saying, all right, what kind of reaction do we get? So like I had a trade here. Oh, wait, I know why. No, I don't. Never mind, kiddos. I think I do this all over again. So close enough. So I mean, I had a couple areas that I was watching for. I said, okay, what happens when it taps here? Okay, it broke through. Cool. I looked left and said, okay, what happens when it taps here? It pulled back just a little bit. I said, okay, cool. And then I had a couple of other zones. Let's see, here, here, and here. And this was my ultimate target that I wanted to hit. You'll notice as we get closer into those lines, it breaks through, it pulls back. It taps in, it pulls back. It tapped again, eventually it broke. I didn't hold to this one, I closed here. Wasn't too bad. But when I was first in the trade, you notice that it tapped to this line, right? I was already above 2R when it got here, but I didn't close it. I left my stops open until I saw it. If it broke this, I was going to close the trade. It didn't break this high. It went through and it broke this low. As soon as it broke this low, then I moved my stop to break even. Because before, I would move it to break even after this. It come knock me out, barely tap me, and then take me out. And then continue going my direction.
Okay. Cool. Did you take a trade on EU today?
I did. I didn't post it. It only went 2R.
Can we go to EU and let me show you my POI? It's on New York session, obviously.
Right here. Oh, and the indicator I use for breaks, guys, is custom. Something I had custom built. It's not anything that we share. All right, there's New York. Oh, sorry. I was like, why are there so many candles on the wrong time frame?
So I had a POI. You see to the left. Yeah, but the bottom right there. Right. Yeah, right there. The blue one right there. I had a POI right there.
Like this?
Yeah. Is that valid? Because I see the other one is way more valid, and that's where it hit today. Really?
Oh yeah, they were both valid. It just decided to come back and hit the other one.
Yeah, pretty late.
I had a trade somewhere. Yeah, it was like right here. So I had a trade in here. I had a trade like right here,
Me too. Me too.
and it came down to this, and then I closed it. But this was one of those times also where you were asking about one second, I have to look at my other screen. Okay, that's where it was at. So hold on a second, I'll show you the trade I took. And this is one of those examples where you asked me about keeping stops open.
This is
So
where I broke even at.
I entered right here. Let's see. Yeah, okay. But I was expecting resistance from right here. I was expecting the trade price to bounce.
Mm.
So price comes in this area. If I had moved my stop loss to break even, I would have got tagged out. It comes into here. I see this reaction. I closed it somewhere about here for 2R, and then it took me out. But before, I had one breaker structure. I think I had a second one here, but it didn't matter because I was expecting some type of strong reaction when we got here anyways, which we did get. And then it
But
moves over.
why though? Like how do you know that? I would think it's we're ready to sell. So why you expect a strong reaction?
Because price never moves in a straight line. It's always reacting to supply and demand. But you have to be aware of where you're entering your trades and how close you are to reaction points. If you go back and look on M15, that point I made was not any specific point without reason. You literally went from a bearish move downwards to a bullish move upwards. This was a reversal. You went from a bearish move downwards to a bullish move upwards. This was a reversal. Price tapped into these reversal spots, and that's what caused price to go up, come down, go up, tap into a supply, try to go down. It failed. Tried it again. What we have here, another reversal spot. And then it jumped from this spot to eventually have enough strength to break this POI. And then it moves into the next POI. So if you go back and look at 1 minute, price comes, look at what happened every single time. Price comes and taps in, fails to break, jumps up, boom, we get a push up, taps into our PR we're looking for. I take the trade down. I already know, hey, here's this reversal spot. I got to be very mindful of. It doesn't tap. It consolidates. Probably would have broke you even on this. It tries one more time to tap. I see a strong rejection reaction. Breaks through the first one. Still hasn't broken through the second. You got two strong reversal spots. Nah, I'm out this trade. I close it for 2R. Previously before, this would be where I'll be breaking even. But just something that I noticed that I saw mostly from Nathan's charts, because Nathan had this concept, the concept he was talking about Tuesday called catalyst for pullback. And so I just started noticing that, hey, my own interpretation of this is that there was a strong reversal here. So these reversal points are strong supply and demand zones. And the more I started backtesting it, I was like, wow, like this is actually very, very true.
Got it. I see. Okay. Yeah, because like something like that, like I will lose my confidence when I'm like, man, this is a sale. And and I don't have no reason why. Why to go up? Obviously, I see now I went to the higher POI, but that would be lovely, getting 2R instead of breaking even or even losing the trade. Like that would have been nice.
Oh yeah, no. It's something like I started applying. So I was looking at some of my losses that I would keep taking when I was my testing. I was like, why do I lose and break even so much? And then that's when I started looking left. I mean, everything you want to know about price is always to the left. It's always reacting to something to the left. When you don't have something to the left, it makes it very hard to see like what's it reacting to. So like my trades today, I mean, I had to go far back, but I knew this was a reaction point, and this was reaction point. And if you notice, everywhere there's a reaction point, it always slows down. When it's not in the reaction point, it moves pretty fast. But you can just kind of tell, all right, it tapped this line. Look at the wick that it left. It breaks through, pulls back, retests it, goes down with no problem. It comes right close to that line. What does it do? Pushes back up. All right, then it attempts it again. Comes down to this last line. After this point, Marco caught the other end of the trade. He ended up going up where I was going down, but I already knew, hey, in this region, it's probably going to stop here, and it's probably going to head upwards, and that's exactly what it did. Marco caught the move up, I caught the move down. But it's all about just looking left. Looking left will tell you a lot.
Let me see the bottom left again, where it reversed that. Oh, he did a big. Oh, okay, yeah, that's gonna give you some boost right there.
Yeah, so this was a low that happened to have a strong reversal. This had a strong reversal. This broke a supply zone. This was another strong reversal. All these spots were just points. I started looking to the left. My ultimate target was down here. I closed it here because of the reaction I saw, where I was like, oh man, it's taken multiple times and it's really not breaking through this thing.
Where's your 15-minute POI right there?
It was right here. So was this POI. Oh, no, I'm sorry, not that one. I'm tripping. It was this one. That was my POI. Came down, tapped into it. I caught the move later on.
Okay, later on. Can I see the 1 minute real quick?
Sure. 1 sec.
Okay, got it.
Yep. But yeah, so this is a process over and over again. But yeah, just being aware of those reaction points where price either may cause a price reversal because it did a previous one, and those are strong demands and supply zones, or it may just cause a slight reaction, like this one did. It taps it, moves sideways, breaks, comes down, breaks. If I know it breaks, it's going to pull back because it took energy to do that. Comes down and breaks some more, tapped into something over here, don't know what it was, pulls back, breaks again, comes down, taps this, strong reaction, taps it again, fails. And I'm seeing this multiple taps. I'm like, all right, I close the trade here. If it takes multiple times and we're not getting anywhere, I'm just going to close instead of hoping for it to break through. So yeah. Any more questions, guys?
The webinars, are they, so they're Tuesday and Thursday every other week or every week?
Oh, every week. Every week, Tuesday, Thursday at 12 o'clock Pacific Standard Time or Pacific Time.
Okay. The one on Tuesday is at 12, right?
Oh yeah, they both at the same time. Mm-hmm.
Oh man. Okay. Got it. Appreciate it.
No problem. All right, guys, I'm gonna let y'all go. Wish y'all the best in your trading for tomorrow. Let's have a kick-ass Friday on NFP week. Please go full margin on all of your trades for NFP. No, I'm playing.
You see the demo? You see my demo?
Okay, Brian, isn't November no stop loss, I guess?
Oh yeah, there's no stop loss November, guys. So
exactly,
use a stop loss. No stop loss. No trades without full margin. No, we're totally joking, guys. Please don't do that. Please do not take this as financial advice. But no, have a good Friday, guys. Please be mindful, be careful. NFP is probably going to come higher than the forecast. Dollar's going to be strong. Dollar's had a strong week. A word to your boy Jay Powell, saying nothing but breaking hearts all week, and letting people know the strong dollar is here to stay. So be careful of your trades. If you have more questions that y'all think of, guys, feel free to ask them in the chat in Discord. Janice, I know you had a question about external liquidity. I'll see if Nathan or somebody doesn't mind sharing like a chart example in the questions, or feel free to chime in on Tuesday and we can answer that question, because I'm not the best to explain that concept, so I don't want to have you confused because it's just something I just don't use. But with that, guys, the recording will be up and teachable. So if you need to replay this, you can watch it again. But outside of that, guys, we'll catch you in Discord. Wish you the best in trading and talk to y'all soon.
Good luck, guys. See ya.
Thank you. Oh, hey, Brian.
Uh-huh.
Are you in New York session? This is for Marco too. In New York session, are you guys trading before NFP or after?
But definitely before for me. After, I don't know if we'll find a trade. I think it's going to drop as bad as it did early this week.
Yeah, I'm closing the, let's say, half an hour before NFP, and then I would be looking for trades 1 or 2 hours after, but that's usually the end of the session, so it's over usually.
Okay, so Brian, are you even trading in Y tomorrow?
Yeah, I follow the same thing like Marco does too. So
Okay.
I mean, if we get something, I'll take it. But if NFP is at 7:30 Central and the market starts at 7 o'clock Central, and for me, the kill zone ends at 11. If we have to wait an hour or two, you may find one trade, maybe two. If you don't, the session's almost over anyways. So
Yep.
I will need that.
And then that kill zone session, it what does it exactly mean for?
The most volume of transactions during the time of day. So it's the overlap of spot transactions, spot Forex transactions.
Oh, no.
So,
All right.
I mean, it would just be like, if you had a sailboat and you're going to sea, you wouldn't go nowhere if the winds were only going 1 miles per hour. But when they start going 40 miles, 50 miles, 100 miles per hour, your sailboat's going to fly, So you wouldn't try to put a sailboat out in 1 mile per hour wind. You would try to put it in 40, 50, 60 mile per hour wind. So that's all we do is we look to see where the most volume is, because that's where hopefully the trades will move fast. So.
Got it. All right. Thank you. See ya.
See you guys.
Okay, guys. See ya.